Hello and welcome everyone. We have an interesting one today. Well, it's Aptos. It's been all the rage. They just launched their mainnet. So today we will talk about what you need to know so that you don't get wrecked on Aptos, and maybe we will hint at how you can actually get some airdrops, get some alpha as you enjoy. So without further ado, let's cover Aptos. Let's get started. All right, Aptos. This has been a controversial one. If you've been near Twitter at all, well, they let's just say they haven't been getting the best comments, and we'll dive into why that is. And but first, let's learn what is Aptos. What's Aptos Autumn? Why is it here? What's happening? So. We welcome everyone to participate in this movement aimed to bring masses to Web3. I think every project I've seen has the same tagline: bring masses to Web3. Okay, I guess everyone's attempting the same thing. After more than 4 years of hard work, this is okay. We'll keep going. Hundreds of contributors from builders and hundreds of diverse community projects across the globe, we've arrived at Aptos Mainnet. We are proud to arrive here together for the people. Cool. So what is Aptos Mainnet? Where did it come from? Let's do a bit of a deep dive. Nansen actually has a wonderful report. Um, Aptos is actually very similar to Sui. If you've heard of Sui, comment below if you want me to do a video on Sui. But they are actually all developed by former employees of Meta or Facebook that were the original builders of their DM blockchain that was going to build the Lyra stablecoin. If you guys remember, Facebook wanted to make their own crypto project. So this is what they were building. They were building essentially Aptos and Sui. And when it was abandoned back in January, a lot of those developers branched off and continued pushing for their own Aptos mainnet. So Aptos is DM reborn. In other words, it's the Facebook and project that was shut down, kind of failed, and then was pushed. What makes Aptos so unique? Well, it has a couple of things that tries to be more unique. For starters, they have a very unique language that it is programmed in called Move. And Move compares to Solidity in the sense that you can't do certain things that can happen in Solidity. For example, reentrancy attacks. What does that mean? Well, it means that essentially, a program cannot be attacked in the same way twice, or it can't be duplicated. So, in something like Solidity, if you don't have proper code, if you don't check your code correctly, you can have a lot of these hacks that are reentrancy attacks. Whereas in Move, the programming language itself doesn't allow for these type of hacks. Um, and then they have expanded Aptos because they claim that they can actually validate up starting with 10,000 transactions per second, and it can scale up to 100,000 transactions per second. So that makes it super fast, and that is why some people are calling it the Solana killer. Now, there's a lot of kind of nuance in there in terms of their transactions per second. We can actually go to their block explorer over here, and we can see they're more closer to doing. Let's see their transactions per second. Gas price validator. Oh, I guess we have to go to the other one for transactions per second. Currently, they're doing 27 transactions per second. Now, that is partly due because there is nothing on mainnet yet. So there can't be that many transactions per second. So once it scales, we can actually see if it's going to be that way. But so far, that is their claim. Aptos is a blockchain natively integrates internal uses of the Move language. As I mentioned, the Move language is what makes it so unique, and they've managed to raise money essentially around the Move language, which aims to enable fast and secure transaction execution, allowing developers to better protect their offerings from malicious entities. Now, this is partly true, though not 100%, and it has to do with Solidity is very open-ended. People can do very many different things with Solidity, and Aptos or Move specifically limits those things. So Solidity can be very safe. You just need to write safe contracts, whereas Move is kind of going over that a little further, and then you don't just have to write safe contracts, that there's baked in code that makes it safer. So that is part of what makes Aptos and SUI so unique. So, that you can dive into a lot of the key terms, especially as if you're just kind of looking into it. Move is what you need to know, the new programming language that is based on Rust, so similar to Solana and Cosmos, actually, but it takes it a little further. Um, so moving on, we need to learn a bit more because, well, they raised 150 million in July after they had raised 200 million back in March or February, and they have now raised, well, 350 million so far. So that is ginormous raise. I can actually scroll and find that raise because, well, it's a lot of money. Here we go. So they raised 200 million at a 2 billion valuation, and then they raised the second 150 billion at a 4 billion valuation. Now, this is Series A, not even mainnet. Series A would put them in the top 20 projects on CoinGecko or CoinMarketCap. This isn't without even launching. So that's why it's a little crazy to have these type of valuations without even going on to mainnet. Now, let's kind of keep diving in because, well, it goes a little bit further than that. If we actually look at some of the numbers, for example, it was precautionary to note that at some stages of funding, Aptos is valued at a much higher valuation compared to competitors such as Solana. For example, in the seed round, Solana raised only 3 million at a 4 cent per SOL and selling around 50% of the initial supply, 15 or 16. Thus, a valuation of 200 million. That was their valuation back then in 2018, as compared to 200 million raised by Aptos at a 2 billion valuation. The seed round valuation of Aptos is already greater than the public auction crowd sale, which gave Solana an FDV of 110 million in March 2020. Given the elevated valuation of Aptos, there might be a risk of event when early investors offload their vested tokens in order to lock in profits. This greatly depends on the public sale valuation, and based on previous project price, would be propped up much higher initially for higher returns for early investors. In other words, it's extremely overpriced. So launching, I believe they actually launched close to a 10 billion valuation, which puts it above BNB, which is just ridiculous considering there's nothing on it yet. Yes, there is a huge ecosystem growing on Aptos. I'm not going to lie. There's a lot of really big projects here. They got everything from NFTs to infrastructure, aggregators, games, launchpads. A lot of people are building cool stuff, but you can't launch a 10 billion valuation. Even doing a series A raise at a 4 billion is a little out there. So let's continue because they did announce their tokenomics the day of the launch. So this was like hours before they launched their token, which was shady to say the least. So, categories, percent of initial token distribution, the community will get 50%, 51. Now, this isn't straightforward. It's actually very open-ended. And what even means community? Well, we'll find out. Core contributors will get almost 20%, which is a very high amount for core contributors. Usually you see closer to 10%, but hey, Foundation will get 16%, which is really the same as community and core contributors. So it's kind of really mixed here, not really explaining what Foundation even entails. And then investors get 14%. Now, this seems fine, but we do have to dive into some of the details here, some of the fine print. So, one out of 120 of the remaining tokens for the community and foundation are anticipated to unlock each month for the next 10 years. So a lot of the community and foundation tokens aren't totally unlocked, which is fair-ish. Now, let's actually look at the token supply and schedule because here's the caveat. Investors, their tokens are staked and their staking rewards can be claimed. So today, more than 82% of the tokens on the network are staked across all categories, and a majority of these are currently locked in accordance with the distribution schedule above. So, staking rewards are locked. well, unlocked really, because if you get the reward, you can sell those instantly. But community core contributors, foundation investors have a 1 year cliff. That means late 2023, early 2024, you're going to get a massive dump on all these unlocked tokens. Now, if this matches a bull run, will it matter? Maybe not, but for now, you have to know that this is huge. Now, doing some quick math, let's do it together actually, because I'll pull out my calculator. Okay, so let's do some quick math. And actually, we can jump onto their own block explorer because we can get the numbers right there. So we can see that right here, 821 439,270. That is the total amount of tokens that are staked, 82% of the supply. Now, we have to remember that there is a 7% inflation. If we go back to their folder here, we can actually find that there's a 7% inflation on staking rewards. Currently, the maximum reward rate starts at 7% annually. So let's get 7% of this. So we multiply by 0.07. That's 57, then big number. That's 7% of just simply staking rewards. So staking rewards are not locked. That means you either get this total annual number of dumping or just people being open or having the option to sell those tokens. Now, this is a very big number, so let's try to narrow it down and divide it by 12. So that brings us to almost 5 million Aptos tokens that can be dumped monthly. We can go further and divide that by 30 if you want. So it's about 160,000 Aptos tokens daily that are unlocked and that can be dumped. Now, this doesn't account for vesting and unlocks on top of that staking. So you have to consider when you get into these tokens, not only are you in the crosshair of the 7% inflation from the staking rewards, but also it's the vesting and all the other unlocks that are tied in. So you got unlocks for the community tokens, the core contributors, the foundation, and the investors. All of these unlock in a year. That's the cliff. Then you got constant unlocking throughout. It's a 3 year vesting. This is a pretty big deal because, that is a lot of selling pressure of people that bought in at a 4 billion valuation. Now, I don't want to get too deep into this, but as you can see, there's a huge sell pressure in what's happening. And actually, there's been a Twitter thread that was written back in July about this. We're being dumped on and tokens don't even exist yet. It's funny because it actually has kind of played out the way real rubber Jesus pointed out. He's saying Aptos is a layer one that's already the safest and most production ready. He's kind of poking at a lot of the articles, which honestly, you got to give them some credit. So they said our mission is to create universal and fair access to decentralized assets for billions of people. Now, let's talk about decentralization because Aptos, if we go over to their Explorer again, they got 102 validators. And actually, we have someone over here, Paul, who worked on the Aptos staking and has been trying to avoid FUDing, but he kind of couldn't hold back and made this interesting thread, kind of touching on their tokenomics. But I want to focus on their validators because they are not community run, permissionless validators. All 101 validators were handpicked by Aptos Labs Foundation, and you had to sign an arbitration agreement in the Cayman Islands to be included in the validator set. Fake proof of stake. Essentially, Aptos is a permissioned chain using proof of stake for economics rather than security. And that's what I was talking about with all those tokens that are being unlocked, that those initial investors or all those people with those tokens can actually constantly be selling. So they're not using proof of stake for security. They're using it for the economics. So investors love proof of stake because it's easier to sustain high token prices if the circulating supply is mostly locked. And that's the thing. Even if your circulating supply is locked, it doesn't matter because you're still earning those staking rewards and those are not unlocked, so you can still sell. Fake proof of stake, essentially, Aptos is a permissions chain using proof of stake. Oh, we said that. More specifically, validators can be fired mid epoch by stake pool owners with one transaction. No need to unstake or wait. There are a couple dozen private keys or less that can halt the network. Now, that's a big deal because you don't want really anyone to have a private key that can halt any blockchain network. So, one third of the stake or take over the network, two-thirds of the stake with few transactions. That's a big deal. That makes it extremely centralized, even though they say themselves that they're decentralized. This does not show any decentralization. So there is a way to share stake across pools, and it's actually what he was working on. So if you've overcome 1 million Aptos minimum hurdle, this is by design. Shared staking was Aptos core PR. So he was working on shared staking, didn't work out. But let's go back to the other tweet because it's just kind of funny how they were, Rubber was mentioning some of these things and it's kind of come true so far. So Actos Teams has PhDs galore and 3+ years of extensive research with zero reported downtime. That's a little funny because you can't have downtime if you're not even live on mainnet. Anyways, let's continue. Built by former DM Association, Facebook, as we know, we talked about this in the beginning. Actos blockchains leverages all the buzzwords. As I said, everyone is trying to bridge it onto Web3. Everyone's trying to solve the world. So that's done already. They uses the Move programming language. I talked about this, and the TPS. Here's what we talked about already. Solana might have 120 TPS, but Solana crashes all the time. Aptos says they will have 160,000 TPS. 160 TPS is transactions per second. So right now, something like Ethereum has 13 transactions per second. That is extremely slow, but they do have scaling solutions. Avalanche on subnets have about 4,500, which makes it a little better, but you get the point. Aptos is supposed to be the fastest of them all. So they raised 350 million. The funny thing is, they actually even raised from Three Arrows Capital. Here we go. You got A16Z, Three Arrows Capital, FTX Ventures. Damn, that hurts. Like Three Arrows Capital could have held out a bit longer and then dumped. But well, rest in peace. So they raised all that money and their testnet went live on March, shooting for Q3 dump day, which was yesterday. Now, I don't want to look at the price, but I guess we have to look at the price at this point because it's been almost 24 hours since Aptos launched. And let's just say it has not been the cleanest of launches. So it's been down 48%. We can kind of see the price. It kind of launched at around $13. It's hovering at around $7. I mean, it could have been worse, but it definitely dumped. Definitely dumped. Okay, so let's continue. So their robust ecosystem is a bunch of rejected Solana dApps. Now, I wouldn't say rejected, I would say mercenary developers. So most of their ecosystem is in fact a bunch of applications that were originally being built on Solana and then just migrated everything onto Aptos. Why? Well, because Jump Capital is invested, FTX is invested, and most of these developers are just kind of like going to where they can get grants and funding. So I don't blame developers completely, but you do get an idea that like these guys are only looking for money. They're not looking to build something that can change the world, or they're not looking to build something interesting like you often get on something like Ethereum. But hey, let's continue. Random Google Cloud collab. When you get all these random collaborations, you like it smells fishy. So which will the Aptos Lab announces its new collaboration with Google Cloud, which will help companies and developers build more easily on Aptos. Well, I mean, it's just a random collaboration. It's like big catchy buzzwords to get people to get in. So in summary, Aptos checks all the boxes for a pump and dump VC funded L1. Founders from big tech, from Facebook, team of PhDs, they all have a bunch of PhDs, low latency, high throughput, safe, reliable L1 solution. And that is all the buzzwords they do use. They are the fastest They're the safest because they're using Move, this new language, and they have funding from all the great VCs. So, and of course, all the devs love it. All the devs moved from Solana over to Aptos because Aptos is the future. Well, not specifically. It's because Aptos had more grants or different grants that they weren't getting on Solana because Solana got crowded. So you have to take all of these things into account, as I mentioned here. And finally, I do want to give Paradigm Engineer some credit. He said it launched broken. It launched today. It's currently the lower TPS than Bitcoin. Now, this, as I mentioned, does have to do with usage. There was nothing to do on Aptos, so you are only going to get at launch 4 transactions per second, but that does have to do with the fact that there was nothing to do at launch. If we go over to it now on Aptos Screener, you got 25, it varies, but it does have to do with like people have to use the chain, otherwise you don't have transactions, and there's nothing to do right now. But hey, he does have some credit. Additionally, the majority of these transactions are not actual transactions. They're merely validators communicating and setting block checkpoints and writing metadata on the blockchain. I mean, it's not additionally, it's literally what's happening. The only thing happening is just validators communicating. So it's hard to see how even use Aptos right now. Well, there isn't anything to do except maybe clear airdrop, which we will hint at soon. So Aptos knows something is wrong between Genesis. They actually disabled their Discord. Um, like, yeah, there's just a lot happening. So I would strongly advise no one to buy Aptos. But here's the fun thing. There's a lot of airdrops we can get into. There's a lot of stuff we can do to farm and be not exit liquidity. So let's move on to airdrops because everyone loves airdrops. Actually, one last thing. Court partially denies Aptos motions to dismiss Glazer's $1 billion lawsuit. Damn, this just came out. It's juicy. October 12th, Aptos got sued a while ago. 1 billion, which is half of their funding raise. It's a lot of money to get sued for like impropriety and like stealing an idea type thing. How Facebook is this? Like Facebook went through the same thing. A judge partially denied a motion by Aptos CEO Mohammed Mo to dismiss a lawsuit filed by entrepreneur Shari Glazer, who claims to have been cheated out of equity as an early investor. According to the court transcript, on October 10th, fraud and 3 other legal claims were dismissed by the court, while 3 others were allowed to proceed, especially breach of contract, which is a pretty big deal. It's not something you want to have hanging over your head when you launch a mainnet. So the alleged entitlement to 50% of Montuni parent company of Aptos Labs, it's a lot of money. Aptos is going to be having to deal with this at their launch. So I guess I've been hinting at airdrops. I think you guys are going to have to stick around. Comment, check out Discord because, if you're in the bird nest, I'm going to be sharing a lot of alpha on there about a lot of these airdrops happening on Aptos because there's a big ecosystem out there that is prime for incentivizing users to come in, try it out, and hey, you liked that optimism airdrop, you liked the ENS airdrop, there's going to be a lot more of this with 350 million in funding. You get a lot of incentives to pull people away. So check out the Discord. I'll be sharing some information in there. Follow me on Twitter, KingJulianIM. I will be sharing a lot more on Aptos. So I'll catch you all in the next video. Peace. Take care.